Hello traders, welcome back to this series of educational videos that FXCM has for you. My name is David Londoño, I'm a trader and also a market analyst, and today's video we're going to be talking about a very important tool we use on technical analysis, which is called the Fibonacci retracement levels. Those are very popular technical analysis tools used by traders to identify potential levels of support and resistance in financial markets. So these levels are based on mathematical ratios derived from the Fibonacci sequence, a series of numbers where each number is the sum of the two preceding ones. So the key Fibonacci levels used in trading include, well, these vary according to your own strategy. For example, on this first Fibonacci example, I'm only using the beginning and the end of the movement and the 0.5 point, which will be the equilibrium for the entire movement. So that's why I use this one. I just want to know, according to my strategy, which is the equilibrium point of the entire movement. Then, using quarterly theory, I just want to see the third, fourth of the quarters and the entire movement set. We also have these retracement levels that are used to identify the potential support and resistance levels during retracement. The common retracement levels are 23.6%, 38.2%, 50%, the equilibrium point. As I was telling you before, the golden number, this is known as the golden number, which is one of the most important numbers on the Fibonacci. The 61.8%, known as the golden number. We also have the 70.5 and 79, which is known as the deep discount or the deep premium in this case. And they also have their extensions. The extension levels are used to identify the potential price targets. So, for example, if I place my order on this movement, this retracement, here we have the entire movement we are measuring, right? And then I'm planning to put a sell limit, for example, the level of the golden ratio. Well, then with these extensions, I can have a potential target for this specific one. For example, the target for the specific golden ratio, it's minus, or for example, the deep discount ratio, the 0.79, it will be minus 0.27. So each retracement will have each extension as well. So we as traders, we often use Fibonacci levels in conjunction with other technical analysis tools, of course, to make trading decisions. So it's important to note that while Fibonacci levels can be useful, they are not foolproof and should be used as part of a comprehensive trading strategy with an idea behind the Fibonacci use. If you want to know more about this, we have two articles I will recommend you. The first one is the Fibonacci calculator, in which you can know which is the specific level you want to use for each retracement. Of course, once you know which is the retracement you want and especially why you want to use that retracement. If you don't know more about Fibonacci, well, I recommend you this Learn Forex Fibonacci retracement. Here you can find everything you need to know about this type of approach. So, well, this will be all for this video, guys. If you find it interesting, don't forget to share and subscribe it. And I would see you on the next trading session.